Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories behind the corporate world. Today we're diving into a filing that hints at some fresh cash flowing in, but also a bit of a rework on the deal-making front. Imagine a company needing a money injection. They make a deal, take the cash, and then shortly after, they tweak that deal to get even more cash and adjust the value of what they're selling. That is essentially the story we're going to unfold today with RYVYL Incorporated. Stick around because sometimes a simple amendment can tell us a lot about a company's immediate needs and how they're navigating financial waters. And before we dive in, if you find value in cutting through the corporate jargon, make sure you are subscribed and join our Discord community linked in the description below for more real-time insights. So we're looking at a filing from RYVYL Incorporated, a company operating in the tech and digital space. This report, specifically a Form 8K, usually signals a big event has happened, and in this case it is all about a financial agreement that got an update. This particular 8K is talking about a modification to a deal RYVYL made earlier. Remember, these reports are crucial because companies have to tell the public about major events that could affect their business and their stock price. Think of this as a public announcement system for important corporate news. It is not always the most exciting read, but it is where the real information lies if you know where to look. Back in October, RYVYL announced a deal where they sold some special stock, called Series C convertible preferred stock, to a company named RTB Digital. This brought in $5 million for RYVYL, minus their expenses. This kind of financing is common for companies looking to grow or cover operational costs, especially when they might not want to take on traditional debt. Now, fast forward to December and they've amended that original agreement. What does that mean? It means the terms of the deal changed. This is where it gets interesting. So the immediate takeaway is that RYVYL is now getting an additional $1.5 million. That brings the total from this specific stock sale up to $6.5 million. This extra cash likely addresses an immediate need or provides more runway for their operations or future plans. But that is not all. They also increased the value of that Series C preferred stock itself. It went from being valued at $100 per S-share to $130 per S-share. This is a significant adjustment. For the investors, this new higher value per S-share could mean a few things. It might reflect growing confidence in the company's future prospects, or it could be a way to make the preferred stock more attractive or more aligned with the company's perceived worth at the time of the amendment. For RYVYL, this also changes their liabilities on paper, as preferred stock has a stated value that needs to be accounted for. This modification also ties into how the rights of their security holders are affected. When you change the value or terms of preferred stock, it has implications for the people holding that stock, and potentially for common stockholders as well, depending on the specifics of the stock's rights. To make these changes official, RYVYL had to file a certificate of amendment with the state of Nevada. This is the formal legal step to update their corporate records and reflect these new terms for their Series C preferred stock. These amendments, the updated purchase agreement, and the certificate of amendment are the key documents here. They represent a significant financial event for RYVYL, showing an increased investment and a revaluation of a key class of stock. Now let's dig a bit deeper into what this all means from a financial and strategic perspective. The fact that RYVYL is receiving an additional $1.5 million shortly after the initial closing of a financing round suggests the company might have needed the funds more urgently than initially planned, or perhaps the negotiations for the initial round left room for such an increase, raising the stated value of the preferred stock from $100 to $130. Per S-share is also quite a jump. This could imply that the company's management believes its intrinsic value has increased, or it could be a concession to the investor to secure the additional funding under favorable terms for the investor in the long run. For instance, a higher stated value can impact conversion ratios and liquidation preferences for preferred shareholders. Looking at the broader picture, RYVYL Inc, trading under the ticker symbol RYVYL, has its common stock listed on the Nasdaq capital market. This kind of financing activity, especially when it involves amendments to existing agreements, can sometimes create uncertainty for common shareholders. While the additional capital is generally positive, the terms of preferred stock issuance and their subsequent modifications can affect dilution and future earnings per S-share for common stock. Investors will often scrutinize these deals to understand how they impact the overall equity structure and the potential returns for common stockholders. The filing also includes standard checkboxes for other disclosure requirements. For instance, whether the form is related to communications under specific rules like Rule 425, which deals with communications related to security offerings, or Rule 14 and -12, which pertains to soliciting material for proxy contests. These are essentially housekeeping items to ensure compliance with various SEC rules. RYVYL also indicates whether it is an emerging growth company. This status provides certain regulatory and disclosure accommodations, such as extended transition periods for new accounting standards. Many smaller growing companies utilize this designation. Now let's synthesize this. RYVYL Inc. secured additional funding by amending a prior agreement, increasing the total capital raised from this specific transaction by $1.5 million. They also adjusted the valuation of the Series C preferred stock upwards. This tells us a few things. Firstly, the company is actively managing its financing needs and is able to renegotiate terms, which can be a sign of strength if they are getting better terms, or a sign of necessity if they need more funds quickly. The increased stated value of the preferred stock could be a strategic move to appease existing investors, or make the security more valuable for future conversions or sales. From a general perspective, this indicates that RYVYL is navigating its growth phase with a focus on securing capital, and the recent amendment suggests a need for more resources or a belief in a higher valuation going forward. However, without more context on the company's specific financial health and operational performance, it is hard to say definitively if this is a purely positive development or a sign of underlying pressures. So, what is my take on this? RYVYL is clearly in a growth or turnaround phase, requiring significant capital. The fact they could renegotiate for more money and a higher valuation is a point in their favor, showcasing some leverage or strategic maneuvering. However, it also highlights their reliance on external funding. The risks here lie in how effectively this new capital will be deployed to generate returns, and whether the increased preferred stock value will translate into sustained growth for common shareholders. It's a delicate balance, and investors will be watching closely. Alright, that is our breakdown of RYVYL Inc's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.